Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. Now, this is going to be a very weird live stream recap video because we did take one trade, specifically SPY, during a live stream yesterday, but we did not take this specific trade that we took today, which was Tesla, in a live stream. So, it doesn't really matter, obviously, but I just want to let you guys know. But let's first talk about SPY. So, if you guys haven't watched the most recently uploaded video in my channel, make sure you guys watch that first before you come here, because I'm going to talk about the same SPY trade, right? The same SPY trade I talked about in that video. So make sure you guys watch that first, because I do a lot more in-depth analysis on SPY and why we got into a trade than I will right now. So for a brief summary, basically what I said in that video, SPY went up to 367 on Monday. We gapped up to 367, and 367 was my maximum profit target or price target for SPY. And unfortunately and fortunately, we're able to retest 367 on the first week of this trading week, which is pretty awesome. So we entered right at 10:01 a.m. and that's in Pacific Standard Time. So we entered right over here, okay, on this candlestick, and that means my entry was at 366.50ish, right? All of my CFO Stream Watch members know that, and I set up a stop loss of about $1. Okay, it could have been 50 cents, but I kind of want to make room for the stock to move, for the share price to move, because I knew that we will be consolidating, and I told my CFO Stream Watch members that ideally, what I want from SPY on Monday is that I want us to consolidate for the rest of the day, because we want to see the price oscillating back and forth, up and down between this 367 level. Why? Because we had such a big gap up, and it was essential that we make some sort of a pattern to allow us to continue to move up higher, right? Because we don't want to see a complete reversal and the start of a gap fill right after the gap up was made, all right? That will give leeway for sellers to come back in and say that, hey, seems like the buyers weren't that strong enough for this gap up, so why not just come back in and literally push the price back lower again? So I did not want that, because I was biased to the upside based on the gap up that we had and based on the consolidation that we were seeing. So we got specifically, right? So now I will show you guys the contracts. SPY $400 calls expiring on November 7th. Now, remember this. You guys can still use the same contracts, right? I still like these contracts that expire on November 7th. They encompass the October seasonality, and they're right before November 8th elections, the midterm elections that the US holds, right? The USA. Now, these calls, we took profits for 90% this morning, right? I got out right here on this candlestick for 90%, and I'm still holding a little bit, all right? I still have less than half of a position left, and I'm looking to actually re-add to my position because I'm liking what I'm seeing on SPY. And if you guys have been following their earnings so far, for Netflix specifically, Netflix has been moving up a lot after hours, and SPY has been affected. Okay, it just makes sense. Because Netflix is one of the heavy names that can move the markets as well. And SPY is, I think, currently around slightly above 373. If not, then it should be slightly below 373. And I'll look to add if we come back down tomorrow and start filling the gap again, because I know we will have a gap up, a small gap up at least. And if we do decide to come back down and retest either 371 or even 372, which is a level of resistance today, okay, right over here, I'll make it perfect for you guys. So this 372 level, if we come back down and retest it as a new level of support, since we have broken above it and after hours, we should be able to continue higher, and I will look to add to that position of $400 calls that expire on November 7th. Okay. Now, if you guys take a look at my Instagram story, or if you guys have looked at my Instagram story, you guys know that some people chose the same contracts, or some people have chosen a little bit more in the money contracts. And I'm so glad that they did because they got a lot more movement in premium, right? And people were able to profit a lot. So make sure you guys take a look at my Instagram profile, the story specifically, and see the profits that were made from this call out. So that's essentially what I have for you guys for SPY. I will go over SPY analysis at the end of this video, but I want to talk about Tesla. So this is another successful trade that we actually had today, but it was not during a live stream because, well, we didn't want to have a live stream today because I did not want people to get so, especially for people who weren't in the SPY trade, to get FOMO, right? And usually when we have a large group of people at the same time looking at the same charts and talking about the same thing, people tend to get a little bit too biased. They get this confirmation bias as a group, as a whole. And they tend to, forget that essentially they need to be protecting whatever profits that they made from this overnight move higher. And they have to realize that, and they have to remember, of course, remember, it's the most important thing, that you can't get that confirmation bias from having such a large group looking at the same ticker or at the same names. So not doing a live stream was really, really good. And instead, we just focused on the chat and just talking to each other using messages. Now, during the time that we're doing this, we were looking at Tesla. So I sent in a technical analysis for Tesla because I said, there is a possibility for us to actually bounce at the previous level of resistance that we saw yesterday on Monday. And what was this level of resistance? 218.30. Now, this 218.30 was a level of resistance that was formed on Monday from a bull flag. And my CFO Single Watch members know this, but I did not, and I was not able to see Tesla's bull flag on the 15-minute time frame here because, well, I was focusing on other names like SEDG, right? That solo name, which has given us great profits as well for my members and for myself too, because of how it reacted off of yesterday's close and above that $200 psychological level. But I'm not going to talk about that since I want to talk about these two trades only. Now, Tesla here, what I was looking for was a bounce, right? Now, I knew we were going to have some sort of a little overreaction below 218.30. How did I know this? Well, just simply take a look at the previous data points that we have, and it's available for us to look at, right? So if you take a look right here, so this is the last 2 hours of trading. We came back down to retest 218.30, the flag resistance from the 15-minute time frame here, and we used it as support. And if you guys take a look at all the bottom wicks, these lower wicks or lower shadows here, you can clearly tell that there has been instances on each 15-minute candlestick that we were trying to break below 218. So I said, okay, if I want a confirmation that we should be bouncing, I need to see a little bit of an overreaction to the downside when we break below 218, right, after a retest. So that's exactly what we got. And fortunately for me and for my CFO Single Watch members, I was able to send in a trade for Tesla here exactly at 8:38, right? So if I look at this candlestick right here, right? So this is a 15-minute candlestick, and I sent in the message at 8:38 a.m. And we're able to get in around, hopefully, 218.30 for people, but I know I got in at the break of 218 to the upside as we're starting to bounce. And these are the contracts, this is the contract that I got. There's 240 call contracts that expire on October 21st. Now, I intended this to be a day trade, which ended up being a day trade, but there is a possibility that we can still swing this name. For people who have held this Tesla call, but obviously I didn't because I don't like the prospect of holding something that can potentially ruin my profits that I've had in the morning so far, especially when we have earnings coming up. All right, so I was not going to hold this trade, and I originally intended to be a day trade, which is why it ended up being a day trade, right? So this one here, I got in around 218. So what is my risk to reward ratio then, right? So my risk was that I have a stop loss of about a dollar, right? So if we break below the low that we made on this 15-minute candlestick, which is 217.55, So basically, I would have my stop loss below 217, right? Since my entry was at 218. Now others, if they had gotten in at 218.30 or somewhere slightly above that, then they could have put a stop loss around 217.50, which is another whole number level, right? Now, I personally have a stop loss of $1 on this trade. So what is my reward? So as I was looking at this name on a 15-minute time frame, I said, there is a possibility that we can retest 220. And guess what? We've reacted off of 220 at the close on Monday, right? Yesterday. And if we take a look at these two candlesticks, we had this 220 retest, right? And we're kind of rejecting off of it, right? We've reacted off of it. So that would obviously make sense as a whole number as well that we are going to react again. Now, that wasn't the only thing that was convincing me that we can see a retest of 220. We had the 21 SMA right here, and then the 10 SMA also starting to curl downward because of the fact that we have filled in the gap and then some, right, at market open. So that caused the momentum to slow down and causing both of my 10 and 21 SMAs, which is my momentum pair. If you guys have been paying attention for the last few days, the last few trading days, including last week, these two momentum pairs start to curl down. So I said, okay, if these start to continue to curl down, that means they're going to put a lot of selling pressure on the price. And I need to get a quick exit on this day trade. And if I want a quick exit, I need to get out at 220 because the 21 SMA was already bearing down on the price. And so if the price reacts and retests on the 220 level and coinciding with the 21 SMA, then that will be my exit. And guess what? That's where we exited, right? I took out some and then another at 220, right? And we ended up having a range of a return of around 15 to 25%. Okay, so that was the trade. So that was the day trading. So we had a $1 to $2 risk to reward ratio, right? Because 218 to 220 is a $2 increase, right? Very, very simple math. Now, obviously, if you guys take a look here, you might be saying, wait a second, Andrew, you could have waited until we hit, 2 to 2 again, like a level of resistance. But remember, my thinking initially, right, was supposed to be a day trade. And I'm not going to be, putting myself down and saying like, oh my God, I should have held, I should have held all the way up to 2. But again, I have my game plan set, right? And I'm going to stick to my game plan. And guys, if you guys want to stick to this game called the stock market, you got to stick with your game plan. You have to. You absolutely have to. It's a must, right? And if you get FOMO every single time that your game plan somehow works a lot better after you've gotten out, or if you got stopped out, you're never going to get the patience that you need for any type of trade, and you'll never ever be satisfied with an actual good trade. Because if you have followed your game plan, especially, right, and you are so stuck on the fact that you're not able to get more than what you need, greed starts to kick in, right? And you will never ever be satisfied with a completely normal and good game plan that you've executed perfectly, right? And you won't be able to last long in the markets because greed will kick in and you'll start not using game plans, not using your risk to reward ratios, not assessing your risks beforehand on a trade, and you wouldn't even be doing proper technical analysis because your mindset interferes on the actual data that you should be looking at, right? And you have this internalized aggression and bias towards a certain stock, and you completely forget about technicals or any type of analysis, and you just focus on emotional and mental analysis. And that's where you can find a lot of problems with a lot of traders. All right. So if you guys want to avoid any of that, if you guys want to learn how to control that, make sure you guys check out the description box below and join the CFO Swing Watch newsletter so that you guys can get access to the CFO Discord where we do all of our trades and we look at all the names that we have available in the newsletter as well. So make sure you guys join for 50% off. There are 2 discount codes, so make sure you guys check that out. It's very, very hard to miss. It's the first link in the description box below. All right, so that's it for the recap of today. I just want to give you guys kind of a rundown of what happened to our SPY calls from yesterday on Monday. And make sure you guys watch that video because I really go over in depth of what I think on SPY will do. And obviously, I even showed you guys results of that analysis in that video with SPY futures. So make sure you guys watch that video. It's a very insightful and helpful video. So make sure you guys take a look at that. All right. Thank you all for watching. Thank you guys for listening. And I'll see you guys all on another video.